Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today again we'll take a look at the euro currency. So I don't know whether it needs some comments because you probably know by yourself everything. So yesterday Yellen has put really dovish comments on the perspective of the rate hiking, the probability that stands in the Fed fund futures rate has dropped miserably. So the chances on the rate hiking in June right now, investors assess approximately at 28%. So before the Yellen speech it was the 38%. The rate hiking possibility in April dropped to the zero. It was the 6% before Yellen speech. So that's really was dramatic press conference speech. So we guys have expected that. So we have talked on the possible turning the policy to the dovish, but we just wasn't able to foresee that this will happen so fast. So that's in fact we just have talked about it in the morning, but right in the evening the Yellen already has put their dovish comments on the perspective of the rate hiking, and that has led to the very significant drop in the United States currency across the board. So of course in this situation our previous comments on the possible deeper reaction, deeper retracement hasn't been confirmed, and the Miss Yellen has done its dirty deed again. So that's why in the short-term perspective we probably should be ready for the further upward action. What we could say here, so guys, we just have to acknowledge that those of you who have taken the long position based on this grabber that we have discussed last week probably right now absolutely happy. So we should be jealous of that, those who do not have the position. But at the same time, you still have the chance to join this rally. But here, guys, we feel a bit uncomfortable because in other circumstances, if we wouldn't have the non-farm payrolls release on the horizon, we could say, well, guys, wait for retracement based on this recent action, or they're taking the long position. But if we would say this right now, this will sound like our call to trade on non-farm payrolls release. But we do not want to do this because personally, guys, I do not trade the releases of the important data. Non-farms. Besides, today, guys, will be their first approximation of the non-farm payrolls is the ADP report that we will get, and ADP could bring really big volatility on the market. It could change the situation. That's why, well, I would like to say that we probably should take the long position for the short-term perspective, but it's a bit not really. I can't let to do this to me because personally I'm not trade the ADP reports, and personally I will not trade to take the long position. So guys, that's a bit personal moment. It depends on your attitude to the risk. It depends on your trading style, whether you trade positions, trade the ADP report, important reports, whether you hold position within these reports or not. So you should decide by yourself, but based on the technical analysis, it probably suggests that upward action should happen. I am not sure that we will get definitely the completion of this butterfly that stands at 115.30 area, but we have two patterns that point on taking out of this top and that top. On this top points this big grabber, on that top points this minor grabber. Market stand not at our band. So it has really free room here and is able to take this top here and here. So that's why from that standpoint it's logical to suggest that you could take some position on minor retracement with the at least moving above this top to the approximately 114 even area. So that's approximately 100 pips. So also not small move. Also guys, it's some maybe interesting moment. Of course today we need to watch for ADP report. for the numbers that we have, because it has the 95% correlation with the non-farm data. That's the first moment. Second moment, guys, I am a bit worried about fast turning of the Fed to the dovish comments. Last week, the Bullard, some other representatives of the national federal banks have spoken on the good perspective of the rate hiking in the middle of the year. But suddenly, just on the week after that, Yellen tells and put the dovish policy. Shows the dovish, tells the dovish comments. What the reason for that? My suspicion, guys, it's not, of course, definitely. I'm not known for sure this, but my suspicion that Fed knows what numbers they will get on the non-farm payrolls. They knows what the inflation stands in the wages that we would like to see, and that's why they have put the dovish comments. It really put the shadow on the numbers of the non-farm payrolls on Friday, and I suspect that this could become some kind of the prophecy of poor data. I'm not sure. I do not know this, of course, but it's a bit curious, because if we would suggest that the non-farm payrolls should be positive, why they need to bring this dovish policy, especially between the Fed meeting and especially before non-farm payrolls release? So it will be logical if we will get the average data, for example, on non-farm payrolls, or even good numbers on the non-farm, and they put their dovish comments on the next Fed meeting. That should take in April, so it's not really far, 2 weeks ahead. So why they need to put these dovish comments right now, between the meetings? So definitely it's difficult to explain. But as they have given these dovish comments, this really be big event, and that could become some kind of the anticipation or reaction on the moments that they do know but we do not know, and maybe this is some kind of the preliminary information on the possible poor non-farm payrolls numbers. That's just my thoughts, so maybe I'm wrong, but following this logic of the common sense, they have the relation between there is a relation between the dovish comments from the Yellen and the non-farm payrolls release that we will get on the current week. That's why, guys, we should be really careful, because if numbers will be really poor, that could lead to the fast rally to the upside, and definitely the market will reach the 1530. That's why maybe from that standpoint it makes sense to trying to take the participation in this rally, in this journey, in the short-term journey that will finish right on Friday, and the non-farm payrolls release data. Because hardly market will move slightly high, because take a look, that will be the daily average path. So it will be not really simple task just to move significantly high. That's why it's probably 1530 target is the maximum that we will get on the current week. So that's, guys, as you can see, those moments that you will have to think about. This is really not simple decision what to do. So whether to take position here or not. On the 4-hour time frame chart, we will return back. We are returning back, guys, to a discussion of our long ranged candle. Recall that we have talked many times that these candles, these long candles, very important, and they could become the background for estimating of the targets in the short-term perspective. So as you can see, based on this thrusting candle, we could take the A, B, C bottom pattern. Market has hit 618, minor retracement. Here, guys, as you can see, EUR has held above the confidence support. That was the crucial point. We have discussed this in the beginning of the week and last week, and we said, guys, this will be important. If market will hold above this area, it could continue move higher. Although this continuation is taking right now the dramatic development based mostly by the unexpected Yellen speech, but still the happen what is really has happened. So It's right now stands on the way up, and it has completed. No matter how this has happened, by what reasons market has held above this confluence, but it has held above this confluence and is turning to the upside. It means that market stands with this ABCD pattern to the upside. Its minor retracement has happened, reaction on the 618. Now market moves to the next target. The next target, guys, 1455. It's right here, 100% extension. It's ABC, bottom D equal leg, right here, 1450. This will be next target. 1618 target. Maybe it will coincide. Let's check this. Maybe it will coincide with the target of the butterfly. That could happen. So let's take no. It's significantly high. It stands at 117 area. So anyway, possibly next area this market could reach. Also, market could probably will complete this butterfly. It's also happened. By the way, take a look. The 1618 of the butterfly stands at 117. It's really interesting. So anyway, we should be ready for the further upward action here. So how, if you will decide to take the long position, you will still decide to take part in this possible unexpected number the data releases, you could watch for these fib levels. Although market already has moved slightly higher, but anyway, you probably should take the position somewhere at the first fib level, because market is not at overbought. It doesn't have any resistance above it. That's why if retracement will happen, it will probably be minor, and stop could be put below the confluence. Okay, depending on from what level market will start this retracement. If it will start at 12, of course. But you should watch for a nearest fib support for taking the position, and with the hiding the stop, placing the stop somewhere below the confluence. That's the major idea, because market stands before the tops. Stops could be triggered at any moment, and market will accelerate further to the upside. Also, market, as I said, has no resistances here that could put market to the deeper retracement. Market already stands in extension step, an extension phase. This was contraction, retracement at an extension. Since no barriers exist on the extension, it probably will be just minor retracement. It's already starting to break in the top. So that's our view on the euro currency. So let's see what will happen, and really whether we will get chance to take the position here. It's also the big questions, because it will depend on the ADP report. It will depend what we will get on non-farm payrolls release, what really will happen. So I hope maybe we will get some minor retracement that will let us to take position. For those of you guys who would like to take the part in this journey, so let's see what will happen.